Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is March 17th, 2013 edition of Market Outlook. Don't forget to sign up for this video newsletter and get it free every week by going to www.marketgauge.com and going to the bottom of the page and supplying your email address. So anyway, interesting trading patterns. We were up, 9 or 10 days in a row in the Dow, which was a record since 1996, and that hasn't been duplicated. But in the S&P, that's where we're focused on this upcoming week, because we have a potential island top in the market. And that doesn't mean anything until it confirms over the next couple days. But what we're looking at right here, as you can see, is that there's a gap in the S&P index between the low on Thursday and the high on Friday, which means that there's been no trading, at least on an overnight and a exchange traded basis in the markets. And that's from a technician standpoint fairly significant. The other thing that's interesting is that we have a very important channel, and it also occurred at the very top of this extended channel, which goes back to April of 2012. So it's a channel that nearly a year in duration, and it's touched down several times at the top and bottom of these channels here. And so when this pattern occurs near the top of the top of that channel, and as well as that short-term trading pattern, it's something to take notice of. Now, the other thing is that you can see that the last 4 or 5 days worth of trading action also coincides with our fast moving average, that 10-day moving average. So if we start trading under that 10-day moving average and the lows of the last 4 or 5 days, that's going to be significant. On the other hand, if we open up higher, close that gap, yes, we're still trading at the top of the range here, but it will negate what would be considered a classic trading pattern and a key reversal pattern. The other thing to take notice is that there was excessive volume on Friday. Now, that is also significant as well, although it did coincide with some options expiration. So that could be a factor in there as well. And looking at the monthly chart, you can see the monthly chart in the S&P also overbought, and the RSI is at almost 99. So on a monthly basis, on the channel basis and the price basis and the short-term price pattern that we just identified as that island, coinciding with a pretty rich reading on a longer-term time frame, which is significant. If we take a look at well, that was the monthly chart that we had just taken a look at, and if we take a look at the weekly chart, we're in the same type of scenario. So both the weekly, the monthly, and the short-term pattern are overbought. You've got interesting convergence of all three. So let's be really cautious here. Could be ripe for a sell-off here. Now, we do not have that in the Dow. Although we are overbought on the monthly, on the weekly RSI, on the daily chart, we're still working off an overbought condition. We still are going sideways as opposed to going down, which generally is a positive sign. So a little divergence in the indices. Obviously, the S&P 500 probably the most significant out of the bunch because it's the broadest U.S. indice. So let's keep an eye on that. Let's take also a look at some of the market internals as well. Over here, you can see VIX trading well within its Bollinger Band, so no irrational exuberance there. And again, we're just sort of piddling along the bottom here of the recent lows, and actually I think we made new lows early this week on a multi-year basis. So volatility, definitely a sign of a bull market and real strength, just sort of marching along, but not excessive relative to its recent action. And the same thing could be said on a weekly basis. So in that sense, our key sentiment index not indicating any frothiness there. In addition, our other market indicators, the McClellan Oscillator, smack dab in the middle of its trading zone, no big deal over there. The only thing that's of interest is we are certainly on a shorter term basis looking at advanced declines, which is this chart right here. We are in a relatively high zone, and you can see that the highs here on the advanced declines have been dropping here. Not the breath isn't quite as strong as it was on the initial thrust off that started in November. And then again, the high here in January before it sort of went sideways and worked its way off. It's overbought in a more sideways action. Also met the advanced declines did not get as strong. And now this is the third lower decline on highs, so that could be significant. However, overall, we're looking for a confirmation, so it would have to turn down beneath the plus 2,000 cumulative on a 10-day basis, and we're not quite there. And meanwhile, up-down volume is definitely giving us a little bit more of a warning. But we like to see those confirmed within a couple days to a week before we get a bona fide sell signal. So yellow flags up on the market internals. If you took a look at the overall indices, the Qs are a bit better in that area. So overall, the S&P is definitely looking a little more iffy on a short-term basis. Longer term, we're still well intact. Take a look at bonds. Bonds, as you know, we've been following it on the way down. Obviously, the big massive bond rally and low interest rates definitely in trouble. You can see the declining 50-day moving average. That's pretty steep. You consolidated here, so you've had 1, 2, 3, 4 days where you've opened lower and closed higher. That might be interesting. I could see a short-term pop above the 116 level, but you should meet some pretty good resistance at the 50-day moving average, the trend line that's pointing down, and some work that was done right around the 50-day moving average a couple weeks back. So I could see a potential rally if we can get through the highs on Friday and that 10-day moving average back up to this resistance level. Overall, though, this overall trend definitely looking like the market has topped, and that has been materializing over the last 6 months or so. So that's a pretty nice pattern. On a price basis, we're neither overbought nor oversold. You can see how that's playing out on the weekly charts as well. You have some really good weekly support around the 106, 107 level, which also will probably correspond to the 200-week moving average. But meanwhile, the shorter-term weekly moving average definitely pointing and sloping down. Another sign that the trend is definitely the long-term trend that was up is turning sideways to down, depending on the time frame you're looking at. One last look for we call it a weekend is gold. You can see gold is holding. This is the key trend line here. This slightly upwardly sloping trend line that's been intact since 2010. We're just sitting on it. As you can see that we've spiked through it on a weekly basis a couple of times, but managed to close right on it. So very important, a weekly close under this trend line, and certainly any close under the 150 level would really signify an important change, that even the intermediate term trend, which is defined by the weekly charts, is basically over. So right now, long-term gold bulls, you can say that the trend line is still intact and just hanging on. If you look at the daily chart, you can see that we sort of got a little ahead of ourselves. We got a bit oversold on the downside, broke through the bottom of the Bollinger Band, the bottom of this overall channel here, and then promptly moved back in. It's basically been trading inside of it. But you could say if we take out this work here, trade under that 150 level, even a little bit higher than that, this market could be in for big trouble. On the other hand, a rally back up to the top of the channel, the declining 50-day with additional resistance right around the 200-day, and this body of work here that was done is going to provide some really good resistance. Well, that's it for now on the overall view of the markets. You can see that we've set up some interesting chart patterns here, especially in the S&P, where you've got that a potential island top at the very top of a long-term 1-year up channel. That's it for now. Have a great weekend. See you next week. Good luck trading.